make sure to like and subscribe to see more content like this. So I'm going to be talking to you here about smart money concepts. So what I want you to learn in this video, I want you to learn how smart money concepts work. I want you to learn how to utilize smart money concepts in your trading strategy. And I'm also going to show you a live technique on TradingView on how to analyze a market using smart money concepts. Okay, let's go to the basics. So there are four main things when it comes to smart money concepts. So changes of character. This would be when you're in a bullish trend and you go into a bearish trend. A break of structure. So I'll show you this soon. So a break of structure would be when you keep on getting equal higher lows and higher highs in an uptrend, and when you're getting lower lows and lower highs in a downtrend. And also EQH, which is equal highs. So when the price is at one stable structure, it can also be called resistance. And EQL, which is equal lows, which is resistance at the lower band. So how does SMMCs work? So it works on any chart. So for example, indices like the Nasdaq, US 30, forex, for example, pairs like Euro USD, GBP USD, any forex pair, and also commodities like gold and silver. So who trades with SMCs? SMMCs. A lot of banks trade using smart money concepts. This is because with breaks of structure becomes huge opportunities and upside potential. It also involves other strategies. For example, daily traders who look for price to reach past previous highs or lows. And also news traders, because when the news comes out, you're normally likely to see a break of structure. So with that break of structure, we have the news traders and the smart money concept traders coming in. So it makes a big pile of traders being involved in one trade. So the higher the volume of going down, the more money you're likely to make. So how to find high probability setups when you're trading SMMCs. As always, you need to look from a larger time frame. So you need to level out the resistance lines, where a potential break of structure is, where a potential change of character is, where the equal highs are, and where the equal lows are. So you'd start at the 4-hour or the daily chart or even the weekly chart if you'd like, if you're a long-term trader. As not all traders will see the candles that you see. What is a 15-minute candle is only about an eighth of what a 4-hour candle trader is looking at. And once you have worked your way down, look for a high probability setup and you set and forget. So some live examples. Let's go onto the chart. So this is Euro USD. So let's go to the first trade over here. So as you can see, there is a resistance line here. So we've drawn that out. And considering that we are in an uptrend going up here, that would be considered a break of structure because we passed the volume up here, we've passed it, that candle is formed and it's over there. We've created the trade, we've put a stop loss just below the last resistance line, which is where the volume is, just to ensure safety. We've created a risk reward ratio of 2, and given that it's broken structure through this line here, we can see the uptrend forming and we have a successful trade. So let's go to here. So here we have equal lows at this point and also equal highs. We've seen the break of structure or almost the change of character because we were on an uptrend here and that's going down into a lower trend. So it is also a change of character at the same time, which is why you can see these high volume candles as it's breaking the structure. So this candle here has broken the structure of this. It's landed out of the resistance zone. So it's had a change of character. So we'd place our trade here. We'd make sure our stop loss was where all the resistance zones were, where all the liquidity was. We set up our risk to reward ratio. And we'd follow the trade all the way through for a nice and clean trade. Now let's go on to the trade that you could have taken today. So as you can see, we have a high buildup of volume here, which creates our resistance zone. This was our resistance zone, this blue line here. And as this candle has broken it, we've put on our trades. As we can see that it had high volume and it was ready to blast. So we took our trades right here, sorry. So that was a 1.82 risk to reward ratio, but you can't get 2 all the time. A 1.5 to 2 is the best, and you take your profit. So let's go on to gold now. So as we could see here, we could see the volume here. This was where all the volume was. It's broke that volume, and it's broke the structure, so it's gone into an upward cycle. And then here we have equal highs and also equal lows from this past volume. As the price is coming down, the candle, let's zoom in a little bit more. The candle has landed outside of the volume. So we'd set up our trade and watch it fly all the way down. We could have a risk of reward of obviously 2 here, but we can see there's a resistance line here, so we try to keep it as low as possible to reduce the risk of our trade. Now over here there's another one. This was from today. As you can see, there's a high volume build up here. The price didn't want to pass this volume. We can see down here the price is slowly starting to take past, and as it does, we take our trades. A nice little trade, risk 1 to 4. It's not the highest, but it's still a high probability setup, so you'd want to take trades like these. So now that you've seen it, so there's the break of structure there and the change of character down here. Down here was the change of character, and there was the break of structure from previous liquidity. So what I look for when I am trading smart money concepts. So when I trade smart money concepts, I look for areas in different time zones. Obviously, the higher the time zone, the higher the probability of a setup. This is because the higher time zone traders make the most money. They control the markets. People who have the time to hold a trade for hours on end are likely to make more money than traders who want to be out of the trade within 5 minutes. I also make sure to keep an eye on news, so you'd stay on Safari or Google, whatever website you use, on Forex Factory, and make sure there's no high impact economical news coming out. If there is news coming out, you'd make sure you're out of your trade, you're not going into a trade. You'd wait for the break of structure from the news, and then you take your trades. I also look at what trend the market is in from a bigger perspective. So I'd look on the daily charts on Euro USD. I'd look at whether it was on a bullish or a bearish trend. I'd see the way it's going through these RSIs, which tell me the way the market is going. And here, obviously, you're going to see the change of character. And that is pretty much it. So if you know where the trend is, you know where the news is, you look for your high probability setups, you're always going to be a winning trader. So make sure to like and subscribe, and also join my free Telegram in the description of this video for more content like this. Thank you guys for watching.